Hey everyone, welcome back. If you've been wondering what's happening with taxes in 2025, you're in the right place. Today, we're talking about the IRS's latest updates, and these changes could have a big impact on how much you get to keep in your pocket. Even though inflation has been cooling off, the IRS has made some important adjustments that could help lower your tax bill next year. So it's worth understanding what these updates mean for you. Now, these updates could be good news for a lot of people. We'll break down everything from the new tax brackets to changes in fringe benefits, adoption credits, and even estate taxes. Whether you're an individual filer, married, a small business owner, or someone who receives benefits through work, there's something in here that could affect you. So stick around, because by the end of this, you'll have a solid understanding of the 2025 tax changes and what you can do to maximize your savings. So, let's get started with the new tax brackets. These are one of the biggest updates, and they can have a direct impact on how much of your income is taxed. For 2025, the top tax rate remains at 37%, but it won't kick in until you're earning more than $626,350 if you're a single filer, or $751,600 for married couples filing jointly. Now, you might be thinking, I don't make anywhere near that, and that's okay. Most of us don't. But the good news is that still means more of your income will be taxed at lower rates. For example, the 35% tax bracket now applies to income over $250,525 for single filers and $501,050 for married couples. So, if you're earning under that, your income will be taxed at a lower rate until you reach those thresholds. There's also the 32% rate for single filers earning over $197,300, and for married couples, it's over $394,600. These brackets apply to the portion of your income that falls within that range, not your entire income, which is an important point to keep in mind. The lower brackets are also shifting, and this is where most people will benefit. The 24% bracket applies to incomes over $103,350 for singles and $206,700 for married couples. The 22% rate applies to incomes over $48,475 for singles and $96,950 for married couples. And the 12% bracket applies to incomes over $11,925 for singles and $23,850 for married couples. Finally, the lowest bracket, which is 10%, covers income up to $11,925 for singles and $23,850 for married couples. So, what does this all mean? Well, in simple terms, it means you'll likely owe a bit less in taxes if your income stays the same. These adjustments are made by the IRS to keep up with inflation, so even though prices may go up, you won't be pushed into a higher tax bracket as quickly. It's a small way to help keep more money in your pocket. Now, let's talk about the standard deduction. This is a big one for a lot of taxpayers. If you take the standard deduction rather than itemizing, you'll see a bit more relief. For 2025, the standard deduction for single filers is increasing to $15,000. That's a $400 bump from 2024. If you're married and filing jointly, your standard deduction is going up to $30,000, which is an $800 increase. Heads of households will see a deduction of $22,500, which is a $600 increase from last year. This is great news for many people, especially those who don't itemize their deductions. The higher your standard deduction, the less income is subject to tax, which means more savings. So, even if your income stays the same, you could end up paying less in taxes simply because you're able to deduct more of your earnings. But what if you're in a higher income bracket and subject to the alternative minimum tax, AMT? The AMT can hit higher income individuals who have a lot of deductions, and it essentially ensures that they pay at least a minimum amount of tax. For 2025, the AMT exemption amount for single filers is increasing to $88,100, and for married couples, it's going up to $137,000. The income level at which this exemption begins to phase out is also increasing. For single filers, the phase-out starts at $626,350, and for married couples, it starts at $1,252,700. So, if you're in that higher income range and typically deal with the AMT, these increases could soften the blow a bit. It's not the most exciting tax update, but it's definitely one to keep in mind if you're affected by the AMT. Now let's shift gears and talk about fringe benefits and flexible spending accounts, FSAs. If your employer offers transportation benefits, you'll be happy to hear that the monthly limit for qualified transportation benefits, like parking and transit, is going up. For 2025, the limit increases to $325 a month, up from $315 in 2024. That extra $10 a month might not seem like much, but if you use these benefits, it's a little bit more that won't be taxed. For those of you who use health FSAs, the contribution limit is also going up. In 2025, you can contribute up to $3,300 to your health FSA, which is a $100 increase from last year. And if your plan allows you to carry over unused amounts, you can now carry over up to $660, up from $640 in 2024. These small increases can make a difference, especially if you're using an FSA to help cover out-of-pocket medical expenses. For those of you with medical savings accounts, MSAs, there are some changes as well. For self-only coverage, the annual deductible must be between $2,850 and $4,300. For family coverage, the deductible range is now $5,700 to $8,550. These changes mean that if you're using an MSA, you'll need to adjust your contributions accordingly. Next up, we have the Earned Income Tax Credit, EITC, which is seeing a boost for 2025. If you have 3 or more qualifying children, the maximum credit is going up to $8,046. That's a $216 increase from last year, and it can make a big difference for families who rely on the EITC to help lower their tax bill or even get a refund. If you qualify for this credit, make sure to take advantage of it. If you're living abroad, there's also an update to the Foreign Earned Income exclusion. In 2025, the exclusion amount is increasing to $130,000, up from $126,500 in 2024. This exclusion allows Americans living and working abroad to exclude a certain amount of their foreign earned income from U.S. taxes. If you're one of those expats, this increase means you can shield more of your income from U.S. taxes, which can be a big help. For those thinking about estate planning, let's talk about the estate tax exclusion. In 2025, the exclusion amount is rising to $13.99 million, up from $13.61 million in 2024. This means that more of your estate can be passed on to your heirs without being subject to federal estate tax. And if you're planning to give gifts, the annual gift tax exclusion is increasing as well. You can now give up to $19,000 per recipient without it counting against your lifetime gift exclusion. And here's some good news if you're considering adoption. The adoption tax credit for a child with special needs is increasing to $17,280, up from $16,810 in 2024. This credit can help offset the costs associated with adopting a child and reduce your overall tax bill. If you have qualified adoption expenses, this credit is definitely something to look into. Before we wrap up, I want to touch on a few things that aren't changing for 2025. Personal exemptions are still set at $0, which has been the case since the Tax Cuts and Jobs Act of 2017. There's also no cap on itemized deductions, which means you can continue to itemize without any limits, just like in previous years. Finally, the lifetime learning credit phase-out thresholds remain unchanged. For single filers, the phase-out starts at $80,000, and for married couples, it starts at $160,000. So, what should you take away from all of this? Well, these tax changes might seem small, but they can add up to some significant savings depending on your situation. Whether it's taking advantage of the higher standard deduction, maximizing your fringe benefits, or planning for estate and gift taxes, now is a great time to start thinking about how these updates will affect your finances in 2025. If you found this video helpful, don't forget to subscribe for more updates on taxes, personal finance tips, and ways to keep more of your money where it belongs, in your pocket. And if you have any questions, feel free to drop them in the comments, and I'll do my best to answer them. Thanks for watching, and I'll see you next time.